Hi guys, it's Melissa with the Dominguez-Martin Group, and I'm here again with Linda Ayers of Nova Home Loans.
Hi.
We are doing another segment of our Buying a Home 101 series. And Linda, what are we talking about today?
Today we're going to talk about debt to income ratios. Now I know that doesn't sound very exciting, but in the mortgage lending business, really important information. So you as a home buyer have to know what we mean by that. So basically we're going to take a look at your gross monthly income, and we're only going to allow a percentage of that gross monthly income to be used towards your monthly mortgage payment. Mm-hmm. And that's, remember,
monthly payment,
yes,
like including HOA?
The whole enchilada. So we're going to look at principal and interest, taxes, homeowners insurance, mortgage insurance, and an association if that's what you're interested in.
Fee, yeah.
So those are really important numbers for us to know.
Okay.
And then in addition to that, we're also going to look at your back-end ratio.
Back-end ratio.
Yeah. And that is where we take your mortgage payment plus all that other debt that appears on your credit report.
So there's two separate
calculations that we look at.
Okay.
So we look at both of the front end and the back end. So basically we're going to allow 30% of your income, your gross monthly income, because nobody would qualify on net income, by the way, towards your mortgage payment, and then about 43% on your back end ratio. So if you've got, let's say you're making $2,000 a month and you've got a $1,000 a month car payment, mm-hmm, you're probably a little overextended for being able to get a house.
I've heard, correct me if I'm wrong, the ratios differ depending on the type of loan.
They do, and they can, though that is scheduled to change next year. So just keep in mind 43% is a very good harbinger to use. We're probably all going to be within that. I don't want to get into the details around regulation changes, but yeah, we could be here all day. So that's just a good way to look at it. But if you know already that you've got several car loans or your credit cards are maxed, you really need to start looking at what do I need to do to pay some of those down. Maybe now's the time to trade in that.
How about medical? I've heard medical you don't really need to worry
collections
about.
we're okay with.
Okay.
As of today. It could change next week, who knows. But we're okay with that. But you really need to look at, well, how much am I putting out? What are my debts? Do I have student loans? Are they deferred? I mean, there's just so many things that we look at when we look at how much you qualify for. And I will just say this, I think most lenders err on the side of being conservative, mm-hmm, rather than pushing the limit, because it generally, something pops up at the end and then, we didn't expect that.
Probably best to go see Linda, review your credit, right?
Absolutely.
And she can explain, what you need to pay off. And
right.
Yeah.
You shouldn't be out looking at houses, and I usually tell my clients, you're not released to look for a house until we've gone through all the numbers, run everything we need to, and then you get the golden ticket. Mm-hmm. Then you go out and see the house. So it's just really important, especially
really
in this lending environment. Hopefully,
really good information.
It will help all of our home buyers get ready. That's the most important thing.
Be prepared.
Yes.
So go to our website, dominguezmartingroup.com, for more information, or call us today, 702-582-9088. Thank you for watching, and see you soon.